Hello, and welcome to a special hour-long edition of Focus One. Today we're going to talk about the foreclosure crisis. The dominoes began to fall a little over 5 years ago. First was the burst of the housing market bubble, then a collapse of the subprime mortgage market, then a near meltdown of the financial system, and finally a painful, prolonged recession that led to a cascade of mortgage defaults. Through it all, Florida has remained at the epicenter of the crisis. I think we would all like to know whether or not there's light at the end of the tunnel. What have we learned to date in trying to navigate our way through this? What policies or practices need to change in order to expedite recovery? And what resources are available to assist our viewers if they are directly affected by the crisis? In order to get some answers to these questions, we've brought together a very distinguished, experienced panel that can offer distinct insight and perspective on the foreclosure crisis. I'd like to welcome you to the show. First, our first distinguished guest, the Honorable Lee Hayworth, Circuit Court Judge in the 12th Judicial Circuit. Welcome to the show.
Thanks, Frank. Glad to be here.
We also have Ann Weintraub, real estate attorney, Bain Weintraub, PL, and also a co-contributor with me on ABC News here in Sarasota. Welcome, Ann.
Thank you for having me.
Our third guest today is Dr. Greg Firestone. He's the director of the USF Conflict Resolution Collaborative. Welcome to the show. Mike. And finally, we have my friend and colleague, Ned Pope, Vice President at the Collins Center and the Director of the Collins Center's Foreclosure Mediation Program. Welcome to the show, Ned.
Thanks, Frank. Good to be here.
We're going to start a big picture, and I want to start with you, Judge Hayworth. I'll just come back to my opening. Light at the end of the tunnel. This crisis has been here with us for about 5 years now. Can you give us a sense of where we are in it? I mean, is there a light at the end of the tunnel, or is it we're far away from that right now?
Well, you might say there's a tunnel at the end of the light. Let me say that I'd like to be able to tell you that on July 1st, 2018, we'd be past this. Really, any prediction that I make is going to be pretty much a shot in the dark. And the reason for that is that the people that control the really critical data in this area are the lenders themselves. They control how many cases they refer to foreclosure, how many they're going to try to settle. And so I can take an educated guess, and I'll give you my best estimate, understanding that there's a lot of variables here that will affect it. I was on a panel about a year ago with some leading bankers, and they were projecting, this was back in May of 2011, they were projecting another surge. And we've heard the national media, y'all probably have seen the same figures or predictions, that we're going to be hit again with a whole bunch of foreclosures. It hasn't yet happened, as a matter of fact, and I'll just give you some brief statistics here. In 2006, and I'm just going to use Sarasota County because it's the most dramatic. We're a 3-county circuit, Sarasota, Manatee, and DeSoto. In 2006, we only had 1,000 cases of foreclosures filed, period, in the whole county of Sarasota. In 2007, it jumped to 4,100. 2008, 8,400. 2009, 8,500. 2010, it dropped down to 4,700. Last year, it was only 2,900. Manatee had kind of a similar circuit or swing. And this year, we've only had in Sarasota County 1,000 cases for the first quarter. If you annualize that out, of course, that's only 4,000 cases. It's still a lot, but nothing like we looked at in 2009 and 2008. My best guess is that it's going to take about 6 years for us to work through this. And let me tell you how I came to that. We've only got 4 judges in the 2-county, Manatee and Sarasota, that are handling foreclosure cases. With our current staffing, that's all we can afford. And so out of those judges only handle a tiny portion of foreclosure cases because they've got a whole bunch of other types of cases, personal injury cases, medical malpractice cases, contract disputes. So let's just assume hypothetically that each judge took 100 cases a month and was able to resolve that many, which is a little bit ambitious, but that's 400 a month. Times 12, 4,800, but there's going to be weekends and things are not working, holidays, et cetera. So say 4,000 a year. Well, you can see right there, our backlog currently is 16,000 cases. So it would take 4 years just to work through the existing backlog if we assume we could hit that mark of 100 cases per month per judge, which is very difficult to do given our current limitations with resources. So Murphy's Law being in effect, without a surge, just things staying static with things trickling in as they are, we're looking easily at 4 years, and I'm guessing 6 years to work through what we currently have. So that's the best estimate I can make on that. And again, it's pretty much a shot in the dark because who knows what the lenders are going to do. They say they're going to file a bunch more. We haven't seen it yet.
And similar question, I mean, from your vantage point, lessons learned, what has changed in terms of where we are in the process, and then how much have we learned? Are we getting better at sort of navigating our way through this?
I think the critical understanding to have is that while judges going and defending and delaying and the attorneys are appearing before him to decide these cases, I'm on the other side, helping the homeowner with alternatives to foreclosure. And what I see now is more help for homeowners than when we started. The first short sale I did was when it was in 2005, and that's when a homeowner again is selling the property to a third party. The banks agreed to accept less. In 2005, the banks used to hang up the phone and say, forget it, we want the property. Now, because as Judge described, the backlog, what we see is banks saying, no, we don't want any more properties. In fact, we don't want to be asset managers, we don't want to hire realtors, we don't want to mow lawns, we just want our money. So what we're seeing is more programs that are geared towards getting the homeowners incentivized to sell quickly so the backlog for the lender is lessened.
One of the recourses is foreclosure mediation, or the idea that by sitting down and discussing things, there might be a way to sort of keep the homeowner in the home and actually under terms that work for the lender and the servicer as well. Ned, you've been in the foreclosure mediation game now for a number of years with the Collins Center. Maybe you could just walk us through again how that program has evolved in the state.
Well, I think what you see is, to build on what Ann said, is that foreclosure mediation is one of those innovations as something that has come around in an off-ramp, if you will, to provide more solutions and more creative ways to try and assist both parties that are going through this issue. As Judge Hayworth said, there's a resource issue at the courts. There's also a resource issue at the banks. They certainly were not set up to handle this high a caseload in terms of foreclosure. So the way that foreclosure mediation works, both after the suit is filed and before the suit is filed, is that you have a third party like the Collins Center, and here in the 12th Circuit we work in collaboration with the USF Dispute Resolution Collaborative and Greg's group. And what we try to do is set up what is really a case management process that takes place before a mediation. For those of you who aren't aware what mediation is, it's considered an alternative to a litigation. Far less contentious. In many cases, it's more like a sit-down negotiation with the help of a certified court mediator. And what we do as a third party is try and utilize the mediator network, certified mediators all over the state that are very qualified and experienced at trying to resolve these types of disputes before they turn into a very expensive and lengthy litigation. And then lead the homeowner through the process of submitting documentation, setting up their financial reports so that we can run formulas for them, or assist the bank in running formulas to try and see what opportunities are there for them, and really to view the mediation as a culminating event. So that way, by the time that the homeowner sits down with a representative of the lending institution and the help of the third-party mediator that's court certified, there are some offers on the table and some solutions out there that they can really try and work towards, as opposed to just starting from scratch. So I really see the mediation process as a very effective off-ramp. One thing that is a primary benefit of the mediation process, and again, this is something that Ann can speak to, that you don't really see outside of mediation that much. What we hear from homeowners all the time: I couldn't get a bank rep on the phone. I couldn't go into my local branch and talk to anyone that could actually help me. With the mediation process, if the homeowners choose to participate and fulfill the requirements of the program that are laid out for them, in every case, they get that face-to-face meeting with a representative of the servicer. And that key culminating event is something that we see as a very positive movement in terms of trying to resolve these cases before the foreclosure becomes lengthy, or in some cases before the foreclosure is even filed.
Greg, you're on the front lines here in the Sarasota Manatee community with the residential foreclosure program in Florida. What are you seeing? How is that program changing? Are we sort of learning how to do this stuff better?
Well, I think we are. I think also the different participants in the process are also learning more about how the process works and how to use it better. The point Ned just made about the communication issue, that was huge. We had borrowers saying they couldn't communicate with the lenders, and we had lenders saying they couldn't find the borrowers to talk to. And so through the support of the court initially, and now their pre-suit program as well, it created an opportunity to put them in the same room, or at least on a phone with each other, and we have a telephone option that's sometimes available. And so that, I think, was a huge start in the process. Mediation is confidential, so it gave people a chance to really discuss things more openly. One of the things we see in mediation that's just great is that there are more options the parties can choose in mediation. A judge is limited to what a judge can do, but in mediation you can be very creative and come up with all kinds of solutions in terms of what you're going to do. And so I think everyone's learning how to use that process better. This was not an area that was frequently sent to mediation. Typically it was viewed as, well, you owe the money, go to court, you get a foreclosure, and that's how it works. And I think everyone now is getting better at seeing what the options are, understanding the process, and working in that direction.
Frank, let me just say, too, that there's been a change in the legal framework for mediation, and the Supreme Court's made some decisions. Dr. Firestone, you might want to comment on where we are currently with that.
With regard to civil cases in general, or the
statewide program? The
statewide program. Well, the Chief Justice canceled the statewide program effective last December, and we're kind of partly in a wind-down program, though we're still seeing cases come in. They're just not required to come in.
So yeah, just as a point of clarification, the program hasn't been shut down, but having it become mandatory in all foreclosure cases.
Exactly. The mandate for a statewide program that the Chief Justice had instituted, a prior Chief Justice had instituted, was removed by Chief Justice Kennedy. However, each circuit is free to operate its own program. So, and I think that's what Judge Hayworth was asking me to describe. But for example, in the 12th, we're still following some of those cases in partnership with the Collins Center, because those cases take 120 days to go through the entire system, and some take a little bit longer. Then, as I mentioned, we're still finding some people who like this program. We're talking about, lenders who like, servicers who like this program, who've opted, to continue on a much smaller basis. And we're hopeful, that we may see a new court program instituted at some point. We don't know what, is going to be happening here in the 12th Judicial Circuit. But we do see that people understand the process better, they know how to work with the process better, and there's, in that sense, much less resistance than we saw right in the beginning.
Let's just talk about, there's, in the news over the past couple of months, a lot has been made of the settlement between the federal government and the five of the biggest banks involved in foreclosure for $25 billion. What sort of implications is this settlement going to have on, again, getting through the backlog of foreclosures and foreclosures in general?
Frank, I'm disappointed to say it's not going to actually have a big impact. What we see is about most of the attorneys general who sued 5 lenders. So only those 5 lenders are a party to the settlement. Anybody having a lender other than the lenders involved do not benefit. But for those who do, what we see is maybe they get a $20,000 principal reduction, okay, which is very little. When you're upside down, you owe more than your home's worth by a couple $100,000. There's some money in there to aid programs, which is where we hope it goes, to get people more attorneys. We have a very low type of financing right now for legal aid attorneys. There's a lot of people who can't afford attorneys, and we're running low on funds. So we're hoping that some of those monies are going to be allocated to that effect. What I'd like to see, though, is some of the money is allocated as incentives for people to do short sales. In other words, if somebody is doing a short sale, they then don't have the credit to buy another house for 2 years, so they need to rent. I would like to see some of those monies go towards that person's rent to keep the ball rolling and keep the community strong. I think we're at a real lack for funding in those areas.
Frank, let me bring a sense of kind of what I think is reality to these programs. what happens is the politicians announce these programs. You've got HAMP, you've got HAFA, you now have the settlement case, and all these expectations of people that have mortgages or upside down in their mortgages, they think, boy, I've got a great shot at getting some deal out of my bank. Practical answer to that is that very few of them are. And so what happens is they announce a new program, people get all excited about it and say, oh boy, this is going to be really helping with the backlog and the foreclosure filings. In reality, percentage-wise, very, very few people benefit from it, and so those hopes are dashed because they find, you know, that really the program is not as good as has been promoted, and people get very unhappy about it.
To the judge's point, what we see is over the years, politicians have a lot of pressure on them. They have to get reelected.
Right.
They have to do something, okay? If they want to get reelected, they have to answer to the constituents. But what we see is those actions that they're doing don't match. So in other words, to make these rules, you need to play the game. You need to be on the front lines, seeing what we see every day. The politicians aren't there yet, and you can tell, and they're being forced to react. So they say anything. For example, the settlement was referred to as a landmark decision. Barely, quite to the contrary, it's peanuts. So, you know, it's very upsetting to see this, and again, the homeowners are smarter than you give credit for. You know, over the years, people have been watching these shows, and they're asking questions. They understand the issues now. They get it. They're not going to roll over. They expect more, and frankly, they do deserve more.
One of the things I want to come back to again is, you know, at first glance, we might think there's two parties in a foreclosure process. It's the borrower and the lender. We'd like to keep borrowers in their homes if it is possible, if there's a sort of marginal changes that can be made in order to make financing the mortgage or keeping the mortgage viable. And certainly want to make it within the interest of the lender itself. But there are more parties to this than simply the borrowers and the lenders. And I think something that made an impression on me about a year ago, again, when sort of reading some of the press articles, or the distinction between the interests of the mortgage servicer and the lender, especially in the cases where you have servicers that really don't have any loans on their book. And it seemed as if there might actually be an incentive for servicers to sort of just keep the ball in play and not necessarily reach a settlement. Can you just maybe clarify this a little bit?
Well, let me speak from the standpoint of what we see in the judiciary. You know, this is not just a court's problem, it's a problem of our communities. When you have homes sitting vacant because no one's caring for them and there's potential for blight, the homeowners associations and the condo associations are not getting their assessments. They can't do the repairs and the maintenance that needs to be done to make it an attractive neighborhood. It affects all of us. It drives down land values. It keeps people from coming here and being residents of our community. So it has a ripple effect far beyond just the fact that we're congested in the court system. Unless we can move these cases and get them back into inventory where they can be sold, there's going to be a considerable detrimental effect on members of our community. So I think certainly the situation between the lenders and they're trying to move their cases, I think I can tell you that we have a lot of time available to do foreclosure cases. The problem is the lenders are not taking advantage of that. They will tell the public that they can't get in front of a judge because it takes 500 days or whatever. But I guarantee if you go into our website, we have a judicial automated calendaring system, you will find our calendar begging for time. And there's opportunity for the plaintiffs to come in and get their summary judgments, to get their trials, but it's going begging, and they're not doing it. So what's the reason for that? You can speculate. They don't want to take ownership because once they do, they've got to maintain the insurance, the real estate taxes, the maintenance. They've got to come into these homes that are derelict, repair them. That's expensive for them. So there is motivation for them not to proceed in court, and some of them do that. We don't know what degree because we can't merely measure it, but we do know it's happening.
Well, we also see with these incentives, you were asking, you know, there's the servicer who's the middleman between the homeowner and the investor bank that actually owns the note. That servicer and the investor, they're under an agreement on these incentives. So the servicers will get compensated for each modification they do, each short sale they do. They are compensated, but the compensation is so little that really they're not incentivized. But what we also notice though, if it works and we have, let's say, a short sale happen, then it affects everyone, because what I'm seeing is now we've got sales going. I see the realtors now are making commissions. Now the appraisers are back in business, and the painters and the contractors. People are building again. So every time there's a transaction that takes place, it doesn't just affect, again, the homeowner and the bank. It affects
Ripple effects.
Yes, and it affects our economy. It improves our economy. We don't want things to just sit there and drag. We don't encourage clients and litigants just to sit there and do nothing. We want to turn as quickly as we can to better the community.
All right, I want to turn my attention to the state legislature and just talk a little bit about House Bill 213 that made an appearance but didn't quite get over the hump. And I think some of the background logic in the state of Florida, we're one of the worst in terms of processing foreclosures. I think the average case time for something to work its way through the Florida system is over 600 days. In my understanding, that's the third worst in the nation. So there is an argument out there that putting in place or making changes to the rules in Florida in a manner that would expedite that process, but at the same time, protect the interests of the consumers or the borrowers, that would be a good thing. Now, I had the opportunity to sit in on a Tiger Bay luncheon yesterday where Representative Greg Stubbe, the original sponsor of the legislation, was there. It was a panel on sort of a post-mortem of the legislative session. And he was still, in a way, proud of the bill in that it was well-intentioned, and he referred to it as a very consumer-friendly bill that was just misunderstood. So let me just stop there and just get some of your reactions to that bill, and if there's a need for something like that, maybe next legislative session.
Well, first off, I want to compliment Representative Stubbe for taking the initiative to do that. I know he'd spent a lot of time crafting it. I cannot comment too much upon the merits of that because it may come before me for review for constitutional issues or whatever. I'll let Ann respond to that part. But let me say this. In 2010, the legislature gave the courts some money, and it was like $8 million to facilitate foreclosure relief. When the money trickled down to the 12th Circuit, we got $212,000. With that $212,000, which I don't think is a lot of money, we reduced our backlog from 25,000 cases down to about 15,000. We did that by hiring 4 case managers and calling in 3 senior judges to come in and to help relieve the congestion. That's a lot of work for 1 year. It ended July 1st of 2011. So again, we're back in the situation, and I like to say that, you know, basically we were sailing with the skeleton crew, and then we started throwing the skeletons overboard in the courts. At the same time, our foreclosure numbers were going up, funding for the court system was plummeting. So we had to fire people that we normally would have on hand to do this kind of work back in 2007, and we haven't been restored those cuts since then. So what I'm saying, my point is that give us the resources, give us the tools to do the work in the courts that we need to do, and we don't need to change the settled law, because I think we have demonstrated, and we can demonstrate in the future, that if you give us the case managers that we need, the what I call the flight crews, we got all the pilots we need, the judges can do the work. What we don't have is a ground crew to get everything ready for us to do the work. If they give us those tools, I think we can do pretty well with the existing laws.
Greg, let me just come over to you. One of the points that was made, or the numbers that I found a little bit striking, was the claim that 85% of the foreclosure cases are not contested. And so the argument is there some way that we can expedite these foreclosure cases that really aren't salvageable through mediation or anything, but at the same time do it in a way or set up a program that's not going to hurt the potential for cases that could be saved through mediation or some other alternative arrangements like a short sale. From your vantage point, again, in the mediation process, would something like HB 213 harm foreclosure mediation, help it, or just really be a non-factor?
Well, you know, interestingly enough, Representative Stubbe actually proposed mediation as part of his legislative proposal. It was in HB 1149, I think. And so he was a real advocate, and still is, for mediation in these cases. Part of the issue is when should mediation occur? And I think one trend we're seeing is more pre-suit mediation, which is a very positive thing, and I think it's a real benefit because the plaintiff, the servicer bank foreclosing, doesn't have to pay the court filing fee if they can resolve it prior to court. They never have to come into court to do that. And certainly not every case need go to mediation. There are many borrowers who've just abandoned the property. They're really not interested in trying to work things out, or they're so far behind the lender's really more in a position of just wanting to foreclose on the property. But we can't always tell which cases are suitable and which aren't. And the model that we created in Florida really was to say if the borrower wants to have a chance to talk with the lender, we should give them that chance. So I think that model is a good model in terms of going forward. But I agree with you. I think there are some cases, that don't make sense. And I think one of the incentives that maybe one day we'll have in place is that when they do go through a mediation program or some credible, legitimate form of alternative dispute resolution, that there could be an expedited process for those plaintiffs to try and get their case through court quicker. But what's important to hear is what Judge Hayworth said, which is critical, and that is there are opportunities for the court to file timely now and to get a hearing before the judge, and that for some reason it's just not happening.
Right.
And if I can touch on a couple of other points that were discussed, when Judge Hayworth talked about values, dropping, every time the values drop, that leads to more foreclosures because now you have more people who can't refinance their home and take advantage of a lower rate because their mortgage is underwater and no bank is going to lend them more money than the house is worth. And every house that sits there with the grass not being mowed and the house in disrepair, that brings down the value of the neighbors' houses as well. So there's huge economic cost involved in this. And then just one last point is when we look at the magnitude, you were asking who are the other players in this. It's important to see that you've got the condo associations, you've got other people who may have liens on the property who may be also players in this. And then another complicating factor, besides the fact that you've got the servicers who are representing the owner of the note, a lot of those notes have been securitized. They've been sliced and diced, and your mortgage or someone else, it may be that the Chinese government owns, some fractional percentage, and CalPERS, the California pension system, owns some percentage, and so that ownership is scattered all over the place. So going back to your question, what have we learned? I mean, there was a lot of learning to do because it was such a huge problem with so many different pieces all at once, and nobody really, we could say, was perfect in this process. There were, the robo-signers and so many other problems inherent in this process. So, it's been a big mess. I think we've been able now to sort of tease out what are some of the issues and what are some of the problems. But we really do need to have a process where we can get people to communicate, to work on those cases where there is a problem. And I agree with you. We need to also recognize the need to allow cases to go forward in a timely way where there's no reason not to foreclose as quickly as possible.
Ned and Greg just touched briefly upon the pre-file, the distinction between pre-file foreclosure mediation and then again foreclosure mediation that's mandated after the actual filing of foreclosure proceedings. We've spoken before, and I think you have some views on the best time to mediate, and this actually might be in pre-file. Can you just talk about that a little bit more?
I certainly agree with that, Frank. And what I would say it is at a very high level, there are a lot of technicalities and complications in this process as you go through it and talking about foreclosure and what causes someone to lose their home and what opportunities are available or might not be available for them, especially when you're speaking of legislation. I think one of the biggest challenges that our public officials have in Florida and everyone who's trying to create a solution for this is the distinction between a mandate and an incentive. And that, to me, has been the biggest really headache in trying to figure out what creates an action, because that's what we're all trying to do. We're trying to figure out what strategy can we employ that creates an action from homeowners to really take staying in their home or avoiding foreclosure in some way seriously. Creating an incentive for both the servicers and the lending institution behind the servicers. What's going to create an action from them. On the court side, what Judge Hayworth just referred to, when the court had the financial incentive of the additional funding to have new case managers, have senior judges working on some of these cases, they plowed through the backlog and eliminated probably 30 or 40% of what they had. And that was just a small financial incentive of some slight additional funding. And that's how I feel that pre-suit mediation comes into play. When the Collins Center in 2004 did the hurricane mediation program that lasted about 5 years, dealt with insurance-related disputes pertaining to the 4 hurricanes that hit that year. Obviously an unprecedented level of disaster here in the state, especially concerning property insurance. I don't know that they'd ever seen anything quite to that magnitude and as widespread. So the first 2 years of that program that was ordered by the Department of Financial Services and then CFO Gallagher were mandated. And it was required, and the insurance companies really looked at that as a requirement, and they felt like they were being forced to the table. So even though mediation is supposed to be an alternative to litigation, those meetings were still very contentious. The third year, about halfway through the second year of that program, the insurance companies started to see that, hey, wait a minute, for one flat fee, we can get all this case management done, all this screening done, and then all we have to do is send a representative with some knowledge of the file and some background to sit here and talk to the homeowner who's filing a claim and the certified civil mediator to try and facilitate an agreement. And we can get hundreds, literally hundreds of agreements and resolutions on these claims a month. And so that last year of that program, the settlement rate tripled, because the insurance company saw an incentive to participate and started to use it to their advantage. I think the establishment of pre-suit mediation, the program that we run is mandated by Fannie Mae of all of their servicers, but it occurs before the foreclosure happens. So in other words, the way it works at the grassroots level is if you're 2 months late in your mortgage, then the Collins Center for Public Policy gets the file straight from Fannie Mae. And Fannie Mae is kind of uniquely positioned to make sure that the servicing bank, whoever that is, participates and completes the requirements and all of those things. Just the fact that we can start contacting people after 2 months gives us a much better chance of reaching them. And also, because you're so early in the suit and you're only 2 and maybe 3 months behind by the time you get to mediation, you don't have this giant backlog of money that's owed. So there's not this huge nut to crack, if you will, to try and get back in the house or to
potential for a bargain is much better.
Right. So that way, it's a more collaborative effort at the mediation table to try and avoid it. The fact that it happens earlier in the process. But the key point I want to make about pre-file mediation, as we just call it mortgage mediation because there is no foreclosure at that point, is that it's before it hits the courts. And it is not the result of a government mandate. This is the largest lending institution in the country. Fannie Mae has somewhere between 25 and 30% market share here in Florida, making a decision that they're going to require, internally require that this happens. So there's no government entity forcing them to do it. They see an advantage in doing it. The fact of the matter is, the biggest struggle that we have in pre-file is getting homeowners who are bombarded with different entities offering to help them resolve their foreclosure dispute, to get them to participate. The statistics bear out that you have a far better than 50-50 chance if you make it to the mediation table to avoiding the foreclosure altogether. And I think that's a huge shift in the paradigm of the way that these cases are handled before foreclosure.
And did you want to follow up on something?
Yeah, some of the things that we don't realize and we should factor in here is human. People are emotional, they're angry. We have a lot of homeowners, again, who feel like it wasn't their fault that they're in this situation, that they should fight their foreclosure because they should stay as long as they want to because it was the lender's fault. We have a lack of accountability. We have people who say, I would like to go ahead and keep my home, but I'm not going to hire a lawyer. I'm just going to stay home and let the ball roll. Things don't work out that way. What we need here is people to take accountability. You did sign the loan documents, and you're not the only one. It's a collaborative issue here. We have homeowners, we have lenders. We have to remember, let's take accountability and move on to resolution. What we have is we have anger. And what happens is the only way to resolve the anger of the homeowners actually is going to be to give them an incentive check. The most traction I've seen from banks is when they mail the homeowner and say, if you agree to do a short sale, we will give you $20,000 or $35,000. People say, okay. We don't have that reaction. But when you say to the homeowner, look, we're going to put you through months of documents, okay? We're going to lose your documents. We're not going to give you what you asked for, and we're going to foreclose on you. People are not happy. and therefore they stay, and the anger builds.
I want to go even a little bit beyond that, and help me work through something here.
Sure.
Just as a average Joe Q citizen, you make an investment decision in a home, and you agree to mortgage terms that, for one reason or another, it's hard for you to fulfill. The value of that house tanks. The idea that the bank would foreclose upon you and seize that asset, perhaps there again, there's some accountability there. But for me, in a way, for the actual homeowner, the buck should sort of stop with you lose your home. That's sort of bad enough, because the bank actually, they made a financial decision too, and there was some collateral there in terms of an equity stake that was put down. But in the state of Florida, we have these things called deficiency judgments, and not every state's different. We have some recourse states and non-recourse states. But if in the state of Florida your home gets foreclosed upon, and you lose it, but then through a foreclosure sale, the sale is less than what you owe, the lenders can pursue you for a period of time to recover that deficiency. Yesterday, again, at the Tiger Bay Club, I think part of that bill was trying to narrow the window of time that lenders could come after homeowners for deficiency judgments. But I'm curious as to why we have deficiency judgments in the first place. Could you just explain again the rationale for being a recourse state as opposed to a non-recourse state? Ann?
Actually, Frank, this is probably one of the most contentious topics. First of all, what the heck are we talking about? What this means is you're going to lose your house, and then the lender has 5 years to pursue you, to go back to court, to Judge Hayworth and say, Judge, the fair market value of the house on the date of the foreclosure sale was $100,000, but we're owed $500,000. So now we're going to go back for the difference. That's $400,000 to go back on the homeowner, plus attorney's fees and costs, which could quickly add to $500 for a period of 20 years. Then, if the homeowner leaves the state, the bank has the right to get the judgment valid in another state, so the homeowner's chased for this period of time. Most people end up in bankruptcy. They also feel like, oh, maybe I could leave the country, but under the terms of the Hague Convention, again, still they're stuck with this judgment. The rationale, we don't know, because I wasn't part of the legislature when it was created. However, most states are not like our states. Most lenders I speak with, they say, oh, you're in Florida, that's a non-debt forgiveness state, give us a contribution. But on the very same phone call to a lawyer in a non-recourse state, the homeowners get a better deal. So during that bill that was just proposed, there was a limit to 1 year, okay, instead of 5 years of the recourse. Something like that should be considered, because it's very important. If the homeowners weren't afraid of the judgment, they would have a different reaction, and I do think that is the crux of this issue.
Frank, the reason, to answer your question, why we have deficiency judgments at all is because the lenders like it. They want to put the burden of depreciation on the owner of the property. They don't want to take the risk that the market's going to tank. And so they look at this as additional collateral. If for whatever reason the value of the property is less than what was loaned, they have the option of going against a person who has assets to make up the difference. They think that's fair. That's why they wrote the contracts, and that's why the law is like it is.
Unfortunately, though, most
still,
people...
But it strikes me as there's risk involved with these decisions, and I'm sorry, but it just seems like the lending industry wants to assume no risk whatsoever and put it all on the lender.
Well,
I mean, the lender has. I'm sorry, the homeowner has a lot on the line. You lose your house and you mess up your credit for an extended period of time. Isn't that enough?
Well, keep in mind, though, in mediation, one of the advantages is in a court, if they foreclose, they have that right to then seek this deficiency judgment. But in mediation, one of the things the borrower can say is, I'll agree to this short sale, whatever, if you will agree to waive the deficiency judgment.
Do you see that happening a lot in actual, I mean, not particularly?
I think Ann would be in a better position as someone who's negotiating that all the time.
I've negotiated, God, like thousands, like the hamburger sign, thousands of burgers, thousands of short sales. But what I see is yes, I will not close unless the deficiency is waived. Now, some lenders will say, we want a contribution from the homeowner. We want 10% of their loss for a deficiency waiver. So yes, we see it all the time, and that's why I like short sales again. Plus, in a short sale, the condominium association, they're getting 12 months of dues, and that's paid for by the lender. So the homeowner gets off the hook, condo association gets paid, and something's better than nothing.
And that's one of the reasons that borrowers are better off participating in mediation. If you just walk away and you don't do anything, the bank can foreclose, and then you would owe that deficiency judgment should the bank seek to pursue it. If at least you find some way, either by hiring an attorney, by coming to mediation, or ideally having an attorney in mediation, then you're in a position where you have some basis for negotiation and maybe do something about it. So it goes back to Ann's point earlier about how people are angry, and I would also add scared.
Yeah.
And so it's, for many people, it's something you don't want to deal with. And as Ned said, they're getting all these letters from all these groups offering to help them for a small fee, that kind of thing, and they have a hard time sorting out. You know, the nice thing is, at least here, they're going to, if they see University of South Florida, they're going to know that's a real entity.
It's an
and
imprimatur
hopefully,
validity,
you know, more and more, because of all the good work the Collins Center is doing, they're going to, you know, through the hurricane and other and foreclosure mediation programs, they're also going to recognize the Collins Center in that. But I think that fear and anger, you know, those emotions get in the way.
This is an important point, I think, for the viewers, so I just want to hit upon it. If you happen to be a homeowner that you think there's no way that I can stay in my home, foreclosure is inevitable, you're still telling those viewers that by going through mediation, in a way you protect yourself in terms of some of the fallout and some of the damage, even if foreclosure is inevitable.
Well, you may be able to protect yourself, but why not give it a try?
Give it a shot, yeah.
And if I can, just before the judge speaks, if I can just say something that all viewers may not realize is when you go to mediation, you're not ordered to do anything particular. In other words, you don't have to agree
to anything. Yeah.
If nothing is acceptable, you leave, no harm, no foul, and the mediator is a neutral. That means the mediator doesn't sit like a judge who would make a decision. The mediator is there really just to promote discussion, negotiation, invite them to explore the many options of short sales and deed in lieu and all these other ways that you might be able to resolve a case. But there's really no risk to going to mediation, because if nothing is put on the table that the borrower finds acceptable, you know, they decline. And then they have still the opportunity to have the judge make a determination as to what's legal and right in that case.
Judge Hayworth?
Well, I just wanted to follow up with a comment on the deficiency judgments. We have seen a spike in the lenders coming in now to get deficiency judgments. Several years ago, it was kind of a rare occurrence to have that happen. But what's happening, and I've only heard of this anecdotally, is that there's consolidators who will buy up the judgments. Kind of like a credit card deal. If a person falls behind the credit card, that debt may be assigned to somebody else who comes in and pays pennies on the dollar and then goes after the debtor. We're seeing that kind of developing now in this deficiency judgment. They'll buy, some investor will buy these judgments, pennies on the dollar, and then file for the deficiency judgment hoping to collect something. And the philosophy behind it really, I mean, if a person has a net worth of $2 or $3 million and winds up upside down on a house and owes, you know, a net equity of $200,000, they're going to come after them. I mean, a lot of these people that they're going after really don't have the assets to do it. It's a waste of time, but they still have to go through the court. They're going to have a judgment entered against them for it because there's very few defenses to the deficiency judgment. And so it's going to be an increasing problem that we're going to be facing in the court system.
I want to stick with this just for a little bit longer, because out there as a viewer, you might get a little bit of confusion in that in some cases it would appear that the bank may give me an incentive on the order of $15,000, $20,000, $25,000 to accept a short sale, hand over the keys, and walk away from a home. And in other cases, the bank may not only take my home, give me nothing, but they're going to come after me.
Yes.
What types of cases tend to fall into one or the other category? I'll throw a hypothesis out there. It would be that, let's just say that those with significant assets are the ones that the banks would probably like to pursue. Maybe that's the wrong hypothesis, but it does, I think, affect one of the things that you've heard or about resistance to maybe mediation or any sort of discussion is, if I made a bad investment in one particular home, okay, and I think I'm going to lose it now. I'm behind payments. I can't make this mortgage payment. But the rest of my life financially is I do have some assets that I'd like to protect. I don't want to give the bank any information. I want to give the mediator information about anything. I mean, I don't want them to know what I don't want to give them a roadmap to how to go chase me for money. Just react to some of those.
Well, I think it's a riot because, you know, a homeowner will call me all the time and say, well, I'd like to have a short sale, but I don't want to give my tax returns to the lender. They have to know, every homeowner, if you want a resolution from your lender, you will have to give your last 2 years of tax returns. If you're self-employed, you're going to have to give a profit and loss statement January to date of this year, last 2 pay stubs if you are a W-2, and a hardship letter stating why it is you need relief, and your checking account statements, and possibly they can ask you for a copy of your 401k or IRA. Now, even though 401ks and IRAs are protected assets, short sales aren't laws, and a bank can ask for anything. It doesn't mean they're going to get it. You can say no and then keep paying your mortgage. So that's the thing. If you want relief, you're going to have to give up something for it. It's not just going to come to you. I've never seen a short sale work without financials being given.
Let me make a public service announcement too, if I could, just for a moment. This is an area where a member of the Florida Bar can do an enormous amount of help for the homeowners. We see in the court system a number of borrowers coming in trying to defend their cases, go to mediation, work out short sales without the benefit of a skilled attorney helping them through the process. And we see opportunities lost because the lawyers who are working in this area are very sophisticated and know all the little angles to go to, and they have saved a number of people from what I would consider imminent foreclosure because of their expertise. So I would just encourage folks, you know, if you're not paying your mortgage, put some of that money towards hiring a lawyer because it will pay dividends for you in almost every case.
There is one thing, and again, you know, thankfully most lawyers are good people and doing the right thing, but in every bunch there's bad apples. So beware of when you hire an attorney or another person, you know, paying a lot of money up front for those services. Be aware of attorneys who charge you sometimes on a monthly basis, you know, because where's the incentive to get the case done? You want to make sure who you're dealing with. We've seen a lot of fraud by non-attorney groups and attorneys too during this time. But again, you know, people being asked, you know, okay, deed the property to me, I'll solve everything. That's not going to do it. You're still on the hook for your mortgage. Or give me $30,000, I'll definitely give you a mortgage modification. That's not true. You've got to be very vigilant, and you've got to look, you know, Judge took the time to set up a website that he runs, you know, the 12th Judicial Circuit Court website. We also have Sarasota County that runs a website, and people can go there to see reputable attorneys and also to go to nonprofit organizations such as Catholic Charities, Jewish Children and Family Services, who will actually intervene for free and assist you and your attorney, who could also be for free, with your case so you're not alone.
I just want to circle back and hit one other point that we were touching on a little bit, not directly with the state legislation, but just the issue of Florida's status as a judicial state, wherein all foreclosures have to go through the court system, and that's mandated, as opposed to being a non-judicial state. And there was a bill a couple of years ago, not this past session, that was considering changing that status for Florida. In looking at just some of the numbers in terms of foreclosure crises in other states, it doesn't look like, you know, it's a horrible world in terms of being a non-judicial state, but I know there's a lot of resistance to that. Maybe you could just a couple of comments in terms of whether it's important to preserve Florida's status as a judicial state when it comes to foreclosures as opposed to being a non-judicial state.
Well, I'll start the discussion, then I'll pass it to Ann. You know, we have over 100 years of settled law about what foreclosures work and how they go through the court system. Anytime you upset any sort of legal structure dramatically, there's unintended consequences. And the real estate attorneys that I've spoken to are very concerned about upsetting the apple cart, so to speak, with going from non-judicial, going to a non-judicial situation. People that represent consumers say that it's less due process, that the borrowers have less protections, and that there's more opportunity for overreaching by the lenders. When you look at the paperwork that we're getting into the court system, and the estimate I use is about 20% of it is defective. And if you have situations where the plaintiff's house is not in order, and the lenders are not doing the things they're supposed to do, and they still take back property, it raises issues. And just to go back to the issue that we had with the court funding, back when we had our team of case managers and senior judges, we set up a fast track and a not so fast track. We were handling like 250 cases resolved every 2 weeks through our senior judges with the expedited calendar. Some people called it a rocket docket. And then we had the not-so-fast docket where we're able to focus in on the ones that are being truly contested. And we were able to solve a lot of those cases. So again, it goes back to why throw out the baby with the bathwater when in fact we can demonstrate, given the tools, we can do the work. I'll let Ann comment on what she thinks about the bill to go into non-judicial.
Right. Obviously, I'm an attorney. I'm a lover of due process. I think people should have the right to appear before a judge to argue their case and to have proper defenses raised. It's not proper for a bank to come in and not have to go through a process and not have to have any accountability, and it's not proper the other way around either. There has to be a set of rules that are followed to be in a civilized society. It's just not going to work otherwise.
We're kind of nearing the, we're rounding the bend and getting close to the home stretch in this program. One of the things I'd like to poll all of you on before your parting thoughts, if you could change one policy, one rule, one practice, what would it be? Let me start with you, Ned.
Well, obviously I'm a supporter of the mediation process, and during that process I've also seen a great advantage to some form of organized and streamlined screening before someone is foreclosed upon. I think one of the most frustrating elements of this entire foreclosure crisis is that when you hear the number 85% of foreclosure cases are uncontested, I really don't believe that that's 85% of the people being foreclosed upon don't want to try and avoid the foreclosure. That just might be reflective that that is the percentage of people that might not know how to contest something once it has hit the court system. And when we see people come through the pre-suit mediation program that were well on their way to being foreclosed upon, and all they needed was a $150 change in their monthly payment and someone to call the correct phone number, it's very discouraging. So I would say if there was one thing that I could see changed, it's along the lines of what Representative Stubbe came through with in the bill, was that there is some form of screening required before it hits the foreclosure courts, because you will see an improvement of the overall paperwork that's submitted, I believe, and you will also ensure, to a certain extent, that no one is being wrongfully foreclosed upon, or foreclosed upon if it could be very easily worked out if there was just better communication. And that would, I think, make people feel more comfortable about the opportunities that exist.
Greg?
When the Chief Justice a couple of years ago set up this residential mortgage foreclosure mediation program, it applied to commercial mortgages involving borrowers who were homesteaded in their homes, meaning they had filed for that tax deduction and they were basically Florida residents living here. I guess if I had my one wish, it would be that we had a program like that for the non-homesteaded properties as well, because the borrowers who were homesteaded had the right, if they wanted mediation, to have meet the plaintiff in mediation and discuss it. We didn't afford that to the people who weren't homesteaded. By the way, that could also be new people who had just moved to Florida but hadn't yet lived here long enough to qualify. But there's no reason, many of these people are wealthier people who have a second home in Florida, and they might be in a better position to successfully be able to negotiate a good result. So I think that would have been, that would be my wish for it, and I think, again, that would be a way of slowing down this foreclosure crisis that we're seeing, and hopefully getting more settlements and hopefully preserving land values rather than seeing the decline that seems to continue. And the expense, by the way, this is an expense for the lenders. Having property sit there vacant, it's only going down in value. The roof's going to leak. Now they've got a mold problem. Who knows what else is going on or it's vandalized or people break in. All sorts of things can happen. So I would extend it to homes, non-homesteaded properties.
Ann?
I think the road to recovery is to get these homes moved as quickly as possible. I'd like to see all lenders give cash incentives to homeowners in the amount of 2 years market value rent. I know people are going to disagree and say, why reward somebody for being in default? But that's the reality. This is what's going to work. This is what I've seen work. It's the best in program I've seen. It's better than any government program, and everyone who gets the check is extremely happy. And again, we have another sale. I'd like to see that.
Judge Hayworth.
Well, I'd just like to say that there are some bright signs here and some silver linings. one of the things that I think is very positive is the pre-suit mediation that's happening with Collins Center. I want to thank them for the extraordinary work they've done to help people in our circuit. Secondly, we've got the programs, the HAMP, the HAFA, the new settlement program. To the extent it does help somebody, that's good. We're also seeing a jump in short sales, which is a good thing, which means the lenders are recognizing it's better to save money now than later and go through all the expense. We also have what I think is a resistance on part of the lenders now to recognize that it's counterproductive to dump a lot of properties on the market. And I think it's going to help retard the number of cases coming into our system. But I'm going to end with my final comment. We need help, and the foreclosure relief that we've gotten this year, they gave us a little bit more money for 1 year again. We need to sustain that so we can drive down this backlog and get things back where it should be and get these properties in inventory.
And I'm just going to circle back then. Any additional parting thoughts for our viewers, Ann?
I think people should just keep fighting. Don't roll over, get a lawyer. You know, if you don't have money for an attorney, you can call one of our legal aid organizations if it's your primary residence and you meet these standards. I think you should fight back. I think in a lot of cases, people just, you know, they for some reason are scared. Don't be scared. This is your home. It is important. And also, if you can't avoid foreclosure, go ahead and do the short sale. Again, people need to remember this is something temporary. It's not permanent. And if you have your health, that's the most important thing.
Greg?
I would only add that whether or not there's a court program in place that applies to you, whether or not you have a right to demand it, you certainly have a right to request it. And so I would say to all borrowers, if they're having trouble communicating, if they're looking to create an opportunity to sit down and negotiate, it doesn't hurt to ask through our program, but also through private mediators. They can try and arrange an opportunity to sit down and have that negotiation.
Greg, you're going to have the Ned, final word on the.
I would just build on what everyone has said to recommend to homeowners to make sure that they take a few minutes, look online, look at the court's website, and try and determine the resources that are out there to help them before they just decide that they're going to stop making payments or that they feel the foreclosure is inevitable. Contact your local legal aid, reach out to the Collins Center, see if something if there's a mediation program that could be available for them. Our website is www.collinscenter.org. Or you can learn more about our Fannie Mae program by going directly to Fannie Mae's website, which is knowyouroptions.com, and it explains a little bit about the Florida statewide pilot mediation program that they're doing pre-suit.
Thank you, Ned. Thank you, Greg. Thank you, Ann. Thank you, Judge Hayworth. I'd like to thank METV for supporting the program, and I'd like to thank our viewers for tuning in. We'll see you again next week on another edition of Focus One.